Hello and welcome to the Stock Planner channel. It's that time of year when you make your plans for next year, for the year 2022, and that's what I'm doing now. My goal for 2022 is to be a more consistent trader, and I'm taking steps to do that. Planning is an important step to being a successful trader. I was in the military, and my superiors, the generals, would plot a course and give some high level constraints to a project or an operation. And it was up to the lower level commanders and lieutenants and sergeants to develop their own plan on how to achieve those long term strategic goals. So I'm going to start now with that strategic look for the year 2022 and beyond, and then just highlight briefly the strategies I'm going to use for the coming year. They're not really strategies, just objectives or areas of where I'm going to utilize to achieve my goal. I hope it comes a little clearer as we go through the briefing. Anyway, there's a battle map. So as all you know, I'm a swing trader, and I like to look and get these long-term trends and capture the meat of those long-term trends that are between the peaks and valleys, the tops and bottoms. So you identify the bottom, and then you capture the meat between it. That's a swing trader. You can call them trend traders. Yes, it's trend traders. You try to capture this trend and ride it as long as you can. But you're trying to use, in my case, I use indicators to try to predict these tops and bottoms. And I've back tested this strategy and used it for several years and have some variations of it. In order to predict those tops and bottoms, you need to have a very high level strategic view. Now, swing traders is a lot different than day traders. We don't try to go predict movements by the minute, or you can swing trade. You can swing trade by the hour and 4 hour, but it's very hard and difficult to swing trade on any lower time frame. But anyway, we're trying to look at the big picture and get a scope for the overall marketplace. That's a strategic. That's what a general does. Okay, that's what Eisenhower did on D-Day. Is he set out the overall objectives, and then developed a battle plan, which he didn't probably. His lower level officers developed a battle plan to go along with those overall strategic objectives. The difficulty is that nobody can predict the future. I don't know if the market's going to go up or down next year. All indications say that we're overbought and that the market should correct itself at least by 10%, and that correction is expected in the year 2022. But you still got to try to predict the future. You still got to try to pick, whether the market's going up in oil or down in oil. So your job is to predict those future trends. Just like Eisenhower did on D-Day, you need to go ahead and set out those goals for your trading and develop your little plan. Now, I'm not saying it has to be a great plan, not like the D-Day plan, which I think they spent many, many hours and days. And I mean, those op plans, many hours went into it, a lot of risk. And analyzing that risk was very important. So here's my plan that I hope I can use to gauge and profit by. That's not the plan. The plan is for 2022, I believe that the economy will decelerate and inflation will be with us for some time. So we're going to have a slowing, and our economy is going to slow down. We had this acceleration here. This is your drop on KOVA, and then you had the slow and steady, well, not so slow, but steady rise, and I believe it's going to decelerate for the years 2022 and 2023. And inflation is going to help that. So I'm planning for a decelerating economy. Energy costs and labor costs are going to go up for everything. That's what inflation is all about. I mean, they're going to pay restaurant workers $15 an hour for servers. People at McDonald's are getting $15 an hour. It's $14 an hour currently at Chick-fil-A for just starting. So the costs of everything are going to go up. Inflation is here to stay for the next couple of years. And I believe energy costs will go up. And the people with electric cars are going to have a rude awakening because that electricity and the cost of electricity is going to go up as well. But I believe for 2022, the KOVA fears will start to decline. We might get back a little bit to normal, which I hope. I don't know what's going on with the supply issue, but I think this will continue well into 2023. We'll have stuff that we're looking for at the stores not there. And 2022 is an election year, and there's going to be a lot of change and turbulence this year. So I think the market is going to be very volatile, but especially for the tech stocks, I believe that we're going to see some slowing growth. May not be decline, but slowing growth. That supply issue needs to be corrected. I don't know if anybody's been down to New York City lately, but there's store after store after store empty. My little hometown, there's plenty of stores to rent. By the way, the rent has not come down, but those stores are empty. For the year 2024, I suspect we're going to have some improvement in economy, and I think the inflation situation will stabilize. This is a presidential year as well. So, the current party in charge will want to see some improvement, and there'll be a lot of effort towards that. And the opposing party will try to say that the economy is in shambles. That will create some volatility in the market, but generally, I think the market is going to have improved especially after the 2022 election. And for the years 2025 and beyond, I'm very optimistic. So I'm pessimistic over the next 2 to 3 years, but optimistic for growth in our economy, in our country for 2025 beyond. I think we're going to face some rough years. So I need to go ahead and position myself with how I feel that the economy is going to go. So these are the things I'm thinking about for 2022 short term. There is some inflation fears, and so I'm going to take small positions in gold and silver, and I'm going to go long. And probably do that ETFs. Well, I currently do have gold and silver ETFs and a minor stock. And I'm looking at mid-cap transportation and construction sites, and I'm long on communication stocks, especially since there's going to be some money thrown at high-speed internet for the nation. Even our little county in Virginia is getting money for broadband. And based on this supply and infrastructure changes, I'm long on mid-cap transportation and construction sites, electronic vehicle charging stations. I'm long on communication stocks like Verizon, especially any stocks that will improve that, Cisco, even IBM and Honeywell. I think consumer defensive stocks will do well during these next 2 years. Stocks like Kroger, Walmart, Home Depot, Dollar General. And you can see the switch in those sectors even as we speak. My wife's a Chinese eye doctor, and so I must keep my eye out for Chinese stocks or emerging market and for healthcare stocks. I think with the improvement of technology in our healthcare system, this is an area where, especially with COVID, I think that we're going to see a lot of improvement. But I'm staying away from stocks that are not profitable or doing a lot of R&D, especially in the healthcare sector. So I prefer stocks like CVS, some insurance companies, healthcare insurance companies, and companies like Pfizer, Procter & Gamble. Those companies are stable. I think that's what I like to invest in for the next 2 or 3 years, not things like Palantir or stocks that haven't made a profit yet. I think that's pretty risky. The next 10 years are going to be the decade for technical stocks. Apple, Telsa, Microsoft, Cisco. But I believe for the next 2 years that those stocks are not going to grow as fast as they have been in the past. They're going to be slowing down, but I still am going to keep my eye out for 5G stocks, Internet of Things stocks, and chip makers. But they're not, at the moment, they're not undervalued, and they're not going to grow that much over the next year or two. As I said, my wife's a Chinese doctor. I've traveled. We have an apartment. We actually have 2 apartments in China. So I want to keep my eye on emerging countries, especially China. And there's a lot of issues there. And currently, I can just tell you, I do not have any. Oh, I do. I do have NEO. But I don't have a lot of Chinese stocks. I do have JD.com and Baba on my watch list, but currently I'm not invested. I'm also looking at India and Brazil, and I use it in emerging market ETF EEM. So while I'm interested in emerging markets, individual stocks I think are too risky, so I'm using an ETF. And I'm looking at the financials and emerging market, as I said, ETFs. So I like to play XLF, the financials, and of course Morgan Stanley, Goldman Sachs I played. But staying away from a lot of individuals, smaller companies in the financial section for this next year. I do think financial stocks will do well in inflation. They just raised their rates. I think they'll do okay. But all these financial companies are facing some headwinds, especially banks. Now remember, I just presented what I think is going to be the outlook for 2022. And I'm doing this early because I'm going to revise it during the next 2 or 3 weeks. Everybody's going to make predictions over the next 2 or 3 weeks of what the future is going to be looking like on the internet. So I'm going to look at those videos and revise my plan based on what I think some of the things that they're saying makes sense. This is what you should do. Come up with some premises, jot them down, formulate a overall strategic view, and then apply some stocks to that strategic view. That's what you need to do. And you can have a nice little watch list capturing the essence of how you feel the market's going to go for 2022. Now's the time to do that. That's why I'm presenting this now, a briefing and slide presentation now. But I'm going to revise mine. This is not the end goal. But anyway, nobody can predict the future. Nobody. And anybody that says they can tell you what's going to happen in 2022, all they can do is give your opinion. Your opinion is as good as mine. So, as I said, I'm going to change my mind probably today. As I get more and more information, I'm going to revise my strategic view and then target stocks in order to satisfy those strategic goals. Just like they did on D-Day, just like I did in the military, where I get a project with a few guidelines. I was a computer guy, not a military guy. I mean, I was military, but I was doing computer work. Overall objective, and then I figured out how to satisfy those objectives. That's what you have to do in the stock market too. You find out what the overall flavor of the market is, how it's going to go, and you set your goals based on that, right or wrong. And if it's wrong, revise them. Hey, it's important to get started right now. And don't trade somebody else's plan. Don't trade my plan or anybody else's, or even those videos that I'm going to watch over the holidays. Don't use their plan, but use their ideas. And develop your own plan and strategy and your own system. Find your own indicators when you're drilling down. But right now we're just talking about the very high level view, the high level perspective, and you must form those perspective yourself. It's best to get started, do your own work. Once you learn it for life. The Stock Planner channel is an education channel. We're not advising anything. Do your own due diligence. I'm hoping you're having fun, because I am, and my trading has gotten better since I've started outlining this stuff and presenting it. And the videos are getting a little better as they go along. They are what they are. Happy trading. Catch you on the flip.